Well, the major averages are all up in part to optimism on the China-U.S. trade deal. Reportedly, there could be a suspension of the next round of tariffs on Chinese imports. Joining me now, Point Bridge Capital founder Lambert. Back with us, Jim Awad, Monica Mehta. We were up about 270. We came in up 140. Of course, it's a typical day these days. 100-point swings in a blink of an eye. Talking about this volatility, what do you make of it? Is it worrisome to you? Is it a harbinger of worse things to come for this market, or is it just something that was long overdue?
No, I think it's very natural. Machines are doing a lot of this. This isn't individuals making these choices. It's the machines that are buying and selling. And I think, look, at the end of the day, this comes down to the Fed, the Fed, the Fed. People are talking about Brexit. People are talking about the tariffs. They're talking about the election. But I think the Fed is really going to drive this market over the next year. And
are you concerned? I listened to Jay Powell last night. He sounded... This is what he said that I found interesting, guys. He really says that he believes this economy is going to keep growing and even grow faster. So, I mean, to me, he's suggesting I'm not going to derail this thing. By the same token, though, he admitted he doesn't have the tools to measure just how harmful his decisions are.
Right. He needs to stop raising rates. At the end of the day, that's what needs to happen. And he announced today they're going to do a study next year, and they're going to do a whole revamp of what they look at and how they analyze things.
Sure.
But in the meantime, before they do that, they need to stop raising rates.
So far today, technology looking pretty good on Cisco's earnings. Imagine that. Good earnings and the stock goes up. Industrials look pretty good. Materials look pretty good. Financials are rebounding, I think, in part to Buffett, big accumulation of J.P. Morgan. But energy, Monica, I got to come to you. You're my energy expert. What's the deal with oil? Has it hit the bottom?
We could continue to see volatility here, but I think the consensus is that this volatility has been driven by the president. And I think in general, the sentiment down in Houston is that this is going to pass and you're going to see oil prices
when he put out,
stabilize.
President Trump put out that tweet on Monday at 120. Oil was up. Crude oil, West Texas, was up about $1. Finished down that day, got clobbered the next day. Good politically, but not for that Texas area, but also not necessarily always. America's now, we do want to see oil a little bit higher.
Absolutely. I mean, pump prices are a psychological metric for most consumers, but the energy sector is a huge part of the American economy, so we can't forget that.
Well, the reason you don't want crude to go down further is you worry about the debt of the lower rated energy companies and whether that deteriorates, if it could spread.
Great point. So what do you, I don't know if we talked earlier, the Fed. Where are you with the Fed, Jim?
Well, my feeling is they're going for the foreseeable future. They're going to continue to go. What you hope is they don't raise rates until they break the system. I actually liked Powell's speech last night because he's giving a first sign that there is slow growth abroad, a little bit of a tempering. And you notice in the futures markets, the probabilities of increases next year went down. So I think the market could take 1, 2, 3 more Fed increases. I think anything beyond that's a problem.
It's interesting. In Bostic's presentation today, he used a chart that shows all of the recessions going back to 1960, and every single one of them you saw we were at a low on unemployment, right? And the Fed overshot. I think he was acknowledging that, but by the same token saying it wouldn't happen again. Are you worried about the Fed, Monica?
I think, again, he's telegraphed that he's going to be flexible, and he's telegraphed that he's not sure where this is going to pan out. So that, to me, suggests that there's some adaptability there, and I think we'll take that.
Hal, what's going to be the leadership group that helps us come out of this, you think?
That's a good question. I think that tech stocks are not going to lead this way out. They've been leading for a long time, but there's a lot of stocks that have been beaten down to the point that they're real values. I think energy could help lead us out of here. I think oil, they're pricing in $45 oil on some of these energy stocks. So I like stocks like Concho. I think the financials have really underperformed here and could help lead us out as well, especially if people get a better handle on the Fed and they get an idea of where interest rates are going to be. I think that's really going to help financials.
By the way, NVIDIA is reporting after the bell, so we'll see what happens there. To me, I think that's going to be one of the names in tech that replaces one of these older names, maybe a Facebook. It's got the kind of upside growth potential for the next 5 years that can make it a leader.
Yeah, I think the leadership going forward will be sustainable, moderate growth companies. I think it's too late in the cycle to buy deep value, and the FANG names are sort of damaged now. They've lost their momentum.
Give us an example of that, though.
Well, stocks like PepsiCo, Microsoft, United Healthcare. In other words, moderate growth companies selling at sensible valuations that are self-financing.
Strong cash flows, low debt.
Yeah, exactly. Oh, I think people are not going to want sex. They're going to want sustainability.
All right, guys. Thank you all very much. Jim Awad with the quote of the show. How great seeing you in person.